Welcome to the February 10th, 2020 Advance Report from McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowanGroup, and your financial weatherman with your weekly fast-paced tour of the global financial markets. We will dissect this year's headlines. The coronavirus headlines, the tragic epidemic, started a correction in the Dow, and you can see we were up about 2% for the year in January, moving into negative territory, and then moving back to modest new highs at midweek. Well, what's happened? It's about a 2% gain in the Dow so far this year. What did reverse this week? 291,000 new jobs estimated by ADP. Bureau of Labor Statistics said 225,000 new jobs. The United States jobs juggernaut continues. And happy Valentine's Day, USA. China is halving tariffs on a basket of U.S. goods. This is the first time China's actually reversed their tariffs, which were very self-serving. That's good for several sectors in the U.S. economy, and we'll cover part of that. The S&P 500, a similar pattern, the correction into negative territory, recovery to new highs. And what is the price of the S&P? Well, if you pay $3,333 per S&P unit, you get about $140 in profit. That is 24 times earnings, just above a 4% forward return, plus whatever the growth is, or whatever the shrink may be. And that's the key variable that we cover in the long play program at NetWorthRadio.com. By the way, the gains on the Dow and the S&P year to date, that's about 3% for the S&P, they're exceeded by many of the global high yield funds that we highlighted last year. And that asset class, well, it's not appropriate for every portfolio, but if you come down to McGowanGroup Asset Management at our new suite here at 1776 in the Crescent, what you'll find is a free 1-hour brainstorming session where you can get your financial plan from now to 2030, even 2040. Just go to networthradio.com to start the process. All right, here we are with the Chinese market. It appears that the Chinese markets are building in that the coronavirus will be contained. And here we go with the Hong Kong index down about 5% for the year at this writing, and down about 7% right here. And those two declines build in slower growth. Goldman Sachs had two things to say this week. 6% growth, probably next quarter 4.5%. Due to the outbreak. They're triangulating what the true impact would be, and of course those markets building in a slight decrease. Also, liquid natural gas demand flat for the quarter according to the same source. Now here we go with the S&P 500. This week some amazing things happened. It turns out that 5 technology companies control 20% of the S&P 500. You can see the value of the S&P versus the PE ratio. Look at the tech rec. We ascended to 30 times earnings. The S&P ascends to right here. We get the tech rec after that. Was that overpriced? In retrospect, it was, because it took about 5 years to recover. Then you have the crisis, took another 5 years to recover. Not much different, right, in the levels of the S&P. So what you pay for earnings is critical, because that's essentially 10 years of near flat with some pain in between. But I have a pain point to discuss that's similar to 1999, and some solutions about forward income and quantifiable cap rates. Look at this. Right now, if you update this graph, you're at about right here on the S&P 500 trailing earnings. This yellow part has not been updated yet, but it would come in about right here. But the highest since the crisis, yes, that was because earnings collapsed. And back here, the tech wreck taking place. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowanGroup, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast that has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to NetWorthRadio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.